Hello traders, Greg here with the market update. Okay, so look, the market is still largely focused, obviously, what is going on in the Middle East and exactly how this develops. Look, in the month of July, obviously, we've seen a big escalation. Biggest move has been crude. Crude oil has rallied from $70 all the way up to the highs of $85 where we are now, so it's up a good 20%. We did see on Monday, there were headlines out that mediators in the region were trying to get Iran and the US to agree to a 10-day ceasefire. We saw crude oil come off down towards $80, but in the last day that has been reversed, and we've seen crude pushing back up, and where we are now, back to $85 plus. And largely because obviously no ceasefire has been agreed to. And it seems as if Trump has also rejected that idea. So look, the market is in sort of a holding pattern at the moment, waiting to see exactly how this escalates and what happens next. So some of the things that obviously the market's worried about is that it's going to escalate into full-scale war. Again, that it's going to escalate into hitting lots of infrastructure, Iranian power plants, maybe even Axe Mountain, the nuclear site there, and the key one is obviously energy facilities. So look, if that does happen, or any of the above really happens, we're going to see crude oil spike higher again. The initial targets obviously short term around about $90. Trading above there, then we're going to start looking at that psychological level, $100. But on escalation, this could happen very, very quickly, and we could see crude oil, not only over $100 on this sort of escalation we just talked about, but going back up to those 120 highs. So that's something that traders really need to be wary of. That when crude spikes, certainly, as we saw at the start of the war, it can certainly motor. So look, at the moment, certainly would not be fading or selling crude into any of these rallies at the moment. And bias 100% is still buying dips. So look, what it means for other markets. If we have a look at US bond market, which is very important. US 2 yields are up overnight. They're back at 4.26%. The high post was 4.3%. So we're almost pushing back up towards the highs. I'm a few basis points away. US 10 yields, they were up again too. So currently they're at 4.62%. And the highs during the war was up at 4.68, so only 6 basis points away from that. Look, these bond yields certainly are elevated. They're very important for the broader market and risk, and especially if they continue higher or even spike higher, especially if that US 10 year wants to start pushing towards 5%. That certainly is going to have huge implications for the market, and a negative one definitely would be risk off. We do have a Fed meeting next week. Fed fund futures are pricing in just a 25% probability that the Fed will raise rates by 25 basis points next week. Look, I think that is too low. The simple fact is that we did get a weaker CPI number last week for June, and that was when crude prices were crashing, went all the way down to $68. The fact that crude now is back up $85, and we're up 20% this month, and who knows where it's going to be next week just before the Fed meeting, but certainly the inflation numbers coming next month, we're going to see inflation back up again. Fed's not stupid, they know that. We've also got a hawkish new Fed chair, so 25% probability for me is too low. I think it's a coin flip. So that's something to watch out for, especially if crude continues to rise, which obviously it is doing at the moment. So if we look at other markets as well, USD dollar index back above 101. But the big story there is dollar yen. Yes, it has now made a fresh 40-year high above 163. Currently trading at 163.20. We haven't seen the BOJ intervene yet. Obviously, yes, it's live. It could happen at any stage. But maybe, look, new line in the sand for the BOJ, maybe 165. And obviously, what's happening in the Middle East is not helping them at all. So no doubt they are praying for some sort of peace deal happening there. So yes, look, as far as trading currencies, look, you've got to be long USD at the moment with what's going on with crude and bond yields, because certainly that is a tailwind for the US dollar. If we have a look at commodities, gold actually sort of bucked the trend of higher crude, and we saw a decent rally last night. Gold went from 4,000 all the way almost up to 4,100, up around 40.88 highs. With gold, yes, we have seen in the past couple of weeks very good support at that psychological 4,000 and just below. So that support obviously is solid support. It's shown that on numerous occasions now. Having said that, look, I wouldn't be chasing this gold rally by any means, because at some stage these high yields, higher USD, and especially if crude goes higher, is going to send gold all the way back down. So again, I'd be wary about chasing, gold post that a rally overnight. As far as equity markets are concerned, we did see a bit of a rally. US equities overnight, Nasdaq up pushing up almost 2%, S&P about 1%. So look, they've previously have done a fantastic job of obviously ignoring what's going on in the Middle East and ignoring crude prices, etc. But again, just like with gold, I'm not sure with what's going on that I'd be chasing any sort of rallies fresh and long in US equities either. Potentially, maybe even using these rallies, for a cheeky short. But in any case, look, key takeaways is that crude obviously is the main focus. We're at $85 at the moment, up about 3% for the week. So look, it has been relatively quiet week for crude, but market, as I said, it's in a holding pattern. It's waiting to see exactly what Trump and the US next steps are. But there are reports that potentially it may happen early next week. So we may be in a holding pattern for a few days to come. But in any case, no doubt, these are dangerous markets. Certainly can get volatile very quickly. So you just got to be wary of that. So good luck with your trades, and we'll check back in with you shortly.